Welcome to the Insurance Refocused podcast, where we're highlighting real agent stories and how they are innovating to respond to the changes and challenges happening in the independent insurance industry. My name's Lindsay, and I can't wait to introduce you to my amazing co-host, who just so happens to be my mom, Carey Wallace. Mom, how you doing today?
I'm doing well, Lindsay. I'm excited to podcast today. I'm excited. These are my fun days.
Yeah, it is going to be a good day, and the weather is getting nicer outside, so I feel like everybody's coming out of their funk. Although I guess I shouldn't say our weather's, everyone on this call's weather is going to be great, because we are being joined by our most northern coworker that frequently has like negative below temperatures, and we'll jump on a call and we're like, oh yeah, we took the boat out, and he's like, oh no, I was like in like ski clothes this weekend. So without further ado, Adam, welcome officially to the show. Glad to have you here.
Thanks. It's great to be here. Yeah. And speaking of weather, actually, it's going to be 55 today, which is a heat wave for central Wisconsin this time of year.
Mm-hmm. Record high.
Yeah, when it's 55 here, I'm putting a sweatshirt on, man. I love it, but that's awesome. Good for you.
You're probably what, in short sleeve shirts and shorts when it's 55 out?
Walked in a t-shirt yesterday. And you know what? There is a hope on the horizon, because our boat actually goes in a month. So boat goes back in the water. So
I feel like you guys just have like really cold and then hot. Like there's no in between. Is that right?
March, April are kind of in between, but it rains a lot. I mean, usually this time of year it starts raining a lot, and we'll get an occasional heavy snow as well. But this is kind of our shoulder season, kind of in between. But yes, we do get heat and humidity in the summer.
Yeah, it's baffling to me, your guys' weather up there. I don't understand it, but so Adam, we joined AgencyFocus like around the same time. You have a couple months, maybe 6 months on me.
It was August 2024.
Okay, yes. So you have about 6-ish months on me. But as we were looking at, our future episodes that we wanted to do, I was reflecting on some of the things that I've learned, which I feel like I've learned a ton about agency value, risk factors, how to tell the health of an agency overall, by working here. But you actually do a lot of the valuation work. So I can only imagine how much you've learned in the position, like actually hands-on with agencies looking at their financial stuff.
Yeah, it's been a definite eye-opener, especially when you get to see everything from, your one-stop, 1 or 2 person operation to someone doing 10 million plus in revenue.
So what are some of the things that stand out, Adam, that you have learned over that time frame? And in no particular order. What are the things either that shocked you or really rung true? You knew, but you didn't know to what extent, since you've worked at here and you've been able to look at, I don't even know how many agencies in that time frame, but a fair number. Let's just go with a fair number.
Yeah, I'd say probably in the range of 6 to 8 per month over the past 18 months is about the volume that I've handled. And I guess one of the biggest takeaways is probably it's not about the size of the agency, whether it be revenue, premium, however you want to look at it. We generally look at it in terms of revenue, but it's not about how much you make, but how much you actually keep. And it seems to me, just working with agency owners, that those that pay attention to their numbers, actually keep an eye on the pulse of the agency, tend to be more profitable. But then there's a lot of clients that come to us that say, I have no clue, like, here's what I need help with. And so that's where AgencyFocus plays a key role in helping them manage their financials.
It's funny that you say it's not about the size. And I once was standing on a stage talking about that and tripped up on my words, because a lot of people think the bigger the agency, the bigger the value. That's not always the case. It's about how you run the agency. And one of the most dangerous things is someone thinking that there's $1 million agency over here and $1 million agency over here, and both of those agencies would be the exact same value. Tell me why that's wrong, Adam. Give me one example, or you can give me as many as you want, but why that's so dangerous for someone to think that.
Just off the top of my head, the first thing that comes to mind is their compensation expense. You could be $1 million agency with 7 employees. You could be $1 million agency with 3 employees. I mean, if your compensation is eating up 70% of your revenues, it's going to be really tough for you to be profitable. If, on the other hand, your compensation is 20% of your revenues, you're obviously going to have a lot more profit margin in that case. So compensation
Yeah, I
is the
love.
first thing that comes to mind. Occupancy is another thing. If you're $1 million agency with 3 locations versus 1 location, you're obviously it costs a lot more to support a 3 location operation than it does a single location. That's another thing that I think we see that tends to be out of whack with some agency, or out of balance, is too much overhead in their compensation or their occupancy expenses.
So the example you gave is perfect. You could have 7 employees or you can have three. And obviously, with seven, maybe the capacity, they're operating in a much lower capacity and therefore not as profitable. Give me a downside of just having 3 employees, though. We know the upside. The upside's profit.
Yep.
What's the downside of that?
Your ability to grow. I mean, you always have to be thinking forward. It's funny, Beth and I were actually having this conversation. I had listened to a business podcast the other day, and he was talking about hiring your first employee. And I remember when we went to hire our first employee, and I think it was 2016, and it was like, okay, you're making, let's say you're making $100,000 a year, and you hire your first employee and you have to pay them 60. All of a sudden, you're like, oh crap! Like, I just cut my take home by 60%. Like, I mean, that's a tough thing to do, but I feel like once you're a little bit more established and obviously you have more team members and higher revenues, it's easier to make those decisions. But just looking back on starting out was like, what an eye opener, and bringing me back, 10 years to that situation.
Yeah. I I want to go back to something you said, which is just paying attention. We can tell the difference between agencies that just generally pay attention to their financials versus agencies who don't. And I think that we had a statistic, if I'm remembering correctly, Mom, of like it's like 3% growth or some 3% like right off the bat profitability if you just pay attention. What was that statistic? Can you remind me?
So when we looked at all of the agencies that have financials, they're not using their tax returns as the only time they look at their financials, et cetera. There's a big, big gap for that, which is something like 5 points in profitability. And the reality is, you can't manage what you don't measure. If you're not looking at your numbers, there's no way for you to know if there's an opportunity. Those that get benchmarked, they might be operating at a 17% profitability, but when we review it and look at one-time expenses, discretionary expenses, et cetera, and get to where they could be, like not where they are operating, but where they could very comfortably be operating, that's somewhere in the mid 20s. And for some, it's actually in the 30s or 40s, which is crazy. So you can swing from the average agencies operating at a 17 to high performing agencies are in the mid. We had 2 this week, Adam, that were in the low 40s profitability, which is crazy. So it depends on which statistic you were looking for, Lindsay, but there are very big differences in how profitable agencies are. And everyone wants to talk about a multiple because that's the fun thing to talk about. But the reality is, as an agency owner, the thing you can control most is how profitable your agency is, not the multiple, but the profitability. And those two numbers make up the equation to get to the value of an agency. So if you want to manage the value of your agency, I would focus on the thing that you can control the most, which is your EBITDA or profitability, right?
Yeah. And if I'm an agency owner, listening to this right now, I'm probably thinking to myself, what is it that I'm supposed to be paying attention to? Right? Should I be building a budget? Should I be just looking at my financials? So, I guess to both of you, Adam and Carrie, if you were an agency owner, what would you want to be looking at, and how frequently would you want to be looking at those things?
I'm gonna let you lead, Adam.
Well, one of those agencies, Carrie, that you were referring to, I was unaware of this, but they had come in for a valuation. I think you said 2 years ago, and his valuation was almost doubled, and he does have an EBITDA in the low 40s, which is absolutely phenomenal. But my guess would be is after he went through the valuation process with AgencyFocus, learned like areas where he could be more efficient, or not necessarily cut expenses, but just be more aware of things. And yeah, it's done amazing things for his business over the past couple of years. So
Yeah, I mean, getting a health checkup of your agency before you want to do anything is probably one of the best things you could do, because it's an objective look at your agency rather than, you're under a time crunch where you have to make a decision, which is exactly what he's doing. This is the third valuation he's actually gotten with us. And he's doing it to show his progress, to see where he is. He's also acquired some agencies along the way and been able to pull them in and make them very, very efficient. So he's been able to grow organically, grow by acquisition. And when we first did his valuation, we had a whole bunch of adjustments in his operating expenses because, like many agency owners, he was running through some expenses through his agency. And he realized, if I don't do that and I just take the money in distribution and do it on my own, yes, I'll pay more taxes, but I'll also be able to show how I can operate from a profitability standpoint, and position himself to acquire more, which is fantastic. So um, he did that's my perfect idea of a client, because they take that information, they turn it into action, and we get to see the benefit of that action. So, but Lindsay, you asked, what should an agency owner do today in order to improve their valuation? So I'd probably say get a health checkup, either get benchmarked, get a valuation, whatever. But if I had to tell you to do one thing and one thing only, if that was it, I'd look at your compensation structure. I'd make sure I was compensating appropriately and I was staffed appropriately. So, staffing, how much am I paying and how much are they doing? And is my capacity and my compensation in line with what the industry averages are? If you're not, that is 50% of where you spend your resources. So if you can get that right, you all the other things are easier to fix than that one thing. So if I was going to tell them just one thing to do, that would be my advice.
So they get a valuation or they get a compensation analysis, totally. What if they're not quite ready for that yet? Like, what if they are at a point where they're like, you know what? I do look at my tax returns as my annual financial review. What would you say to the agencies that are in that place?
I would say run your monthly financial statements. Make sure you know what those are. Build a budget for the year to map out, what do I do all throughout the year? What are the things I know I'm going to have to spend money on? What are the things that I think I might need to spend money on? What are the things I would love to spend money on? Like, all of those things, if you map out what you think your revenue is going to be and what you think your expenses are going to be, it now gives you a guidepost. If you don't have that, you're kind of flying blind. And oftentimes we'll wait till the end of the year to say, do I have any money left over to make that first hire, Adam? Wouldn't it be amazing if you actually projected what you thought it was going to be and be able to pull the trigger in October instead of January to hire that person? You'll be so much further ahead. But without a budget, it's really hard to make that call, right? Adam, what suggestion would you make for an agency owner that right now doesn't pay attention to financials? Like, where would you tell them to start?
like you said, do a budget, break it down monthly. I mean, that's it. The other thing is with, I think a lot of agencies get into cash flow issues as well. We talk about that. There's certain, the beginning of the year tends to be when a lot of people want to place their policies. So generally the first quarter, going into the second quarter, revenues are pretty good. Usually by the time you hit fourth quarter, you're sucking wind a little bit. People aren't thinking about their insurance policies come Thanksgiving or Christmas. In fact, that's the last thing on their mind. But if you can budget and project out on a monthly basis, that's going to help, especially those leaner months when you get into the fourth quarter. Even beginning of the first quarter, January can be pretty light too, because you don't get those commissions until February, March for the most part. So
Cash flow is key. There's so many people that have cyclical, and you're talked about making your first hire. I think sometimes, people just think I'll sell my way out of this, and you can plan your way knowing when your cash flow is to actually think about the timing of when you do certain things makes a difference. All right, so we talked a lot about money. What about the non dollars and cents part of evaluation, things that impact the agency's value that maybe aren't necessarily on a P&L or on a balance sheet? Adam, what are some things that can cause the value of an agency to be different than what an agency owner might think it should be?
Well, if we go back to the whole compensation piece, one of the things that we're seeing a lot of this day and age is the use of VAs and also the use of automation. We obviously had our staff at the Indie Tech event here in January, and we're seeing a ton of new automation, and it's moving so quickly. Even with things that we use here at AgencyFocus, I remember one of the conversations we had was, okay, when we meet again in 6 months, like, is any of this going to be relevant, or are we going to be on to the next tool, the next biggest thing? But a lot of agencies are integrating virtual assistants to do non-licensed work, and then also the use of AI. Those are two things that I think are really going to change the landscape of agencies, and we're definitely seeing that agencies that are more forward thinking as far as the use of automation and VAs, those are agencies that tend to have the higher profitability, EBITDA rates as well. So I think those are two huge things. And then just the overall use of technology too. I mean, we do a lot when we look at an agency. We don't just look at the numbers. We go in, we look at their website, where are they located, what's their regional risk assessments, what's their culture like, how many employees have turned over in the past year. So there's a lot of other factors that play into the value of an agency. And then the last one that I would highlight is probably the transferability. Are you a paperless agency? That's huge. I mean, we do still see agencies that are on paper, which blows my mind, but we've acquired a couple agencies that haven't been completely paperless as well. So I know how that looks too. So
I had an I had an agent send me a picture, and it was these piles and piles of paper on top of a filing cabinet, and they just looked like this paper exploded in this office. And he's like, "Hey, do you want to? I bet you can't wait to value this agency," which is kind of funny. And it was like, you can almost place the value on that agency before you even look at anything, just by knowing that that's what that office looks like, right? I mean, it's crazy because when you think about transferability, it it's a foreign concept to some people. They just think if the revenue's high, then the multiple must be 2 times revenue or 2.5 times revenue. But if you have an agency that you're not 100% sure that you can get the history and whether or not those people are going to be retained, because you can't put your arms around exactly what that relationship is with that customer, it definitely puts a strain on the people trying to acquire that book and integrate it into their system, et cetera. So you highlighted some great ones. What about contracts? Tell me what you know about how having contracts or not having contracts impacts the value of an agency, Adam.
well, it's ideal to have contracts in place. As far as the language in those contracts, we actually just had one that we reviewed with here recently, and it was two partners, and one of the partners put this contract in place with the third party, and they were only retaining 10% of the revenue. And he asked us to look at it. We looked at it. The language didn't make a whole lot of sense. And we had someone else look at it who said the same thing. And it was kind of like, okay, you can have a contract in place, but the ability for, and this is state dependent, as you know, but the ability for those contracts to hold any water when reviewed is another thing. And obviously we're not attorneys, so we don't do the contract work, but just having something in place is better than nothing.
I will say, your people are one of your biggest assets. So if you do not have a non-piracy, non-solicit in place to protect your agency, it can really slow down when you go to sell your agency. If you've got confusing contracts in place and there's any question mark about will that business continue to go with that agency when it's sold or when it's transitioned to the next generation, it just makes it convoluted. And the fact that, we couldn't understand the contract, a lawyer couldn't understand the contract, that just means there's question marks around that. And therefore part of that business isn't exactly what he thought it was going to be. The last thing I would say is producer-owned books. Tell me a little bit about the process we go through, Adam, when we're valuing an agency for producer-owned books, because lots of agency owners want to incent their producers to stay and give them, a little bit of skin in the game, if you will, to stay with the agency. It's a very common practice. But when you do that as a producer owned book or partially owned or 1099 or whatever, it can be tricky. So walk us through what that looks like when you're going through a valuation.
Well, the first thing I'd say is you can't sell what you don't own. So you got to keep that top of mind right away. But if we're valuing a book or an agency that has producer-owned books, we actually will have to go in and take and remove those books because they don't have ownership in them. Obviously, the producer has a percentage of ownership. My thought on the whole thing is it can just get really messy. It's one of the interesting things that I was told early on in my career was a ship. The only ship that'll never sail is a partnership. And I don't know. I think there are some great partnerships out there. Don't get me wrong. I see it all the time. But when you start to muddy the waters with producer-owned books, it can get messy. And like you said, if you sell, are they going to stay on? Are they going to want to take their book and go elsewhere? The other thing is it going to be an internal sale? Is it going to be an external sale? Because if you're doing an external sale, that adds a whole another piece of complexity. If you have the same staff, the owners that have been, within the agency for years, it's going to be a much smoother transition as opposed to like private equity or an external sale. So those are all factors that come into play, but it can get messy. That's all I'd say.
It can definitely get messy. You're 100% right. And, a buyer wants to negotiate with one seller, not four, and not one majority and three minority that can slow things down, et cetera. But if you're an agency owner and you've offered your producers ownership in their book, or worse off, you have 1099 producers where it's gray. We don't know actually who owns the book of business because there is no contract in place and you've engaged them as a 1099. Just know any question mark you put around a book of business, especially if it makes up a large percentage of your agency, will take more time and may hurt the value of your agency because the unknowns that are around that at a minimum would put a retention clause on that. And at the maximum, it would be eliminated because as a buyer, you have to know with certainty what you're buying and will it transfer and what the likelihood is of that. The value of an agency is really based on the predictability of that, the profit or the ongoing cash flow out of that business and the predictability of that cash flow. And when those things are in question, the value of an agency doesn't go up, it definitely goes down, or the structure of the deal changes. So Adam, as you look at the markets shifting from a hard market to a soft market, what do you see some agency owners facing from a valuation standpoint?
Boy, that's an interesting question. I think heading into a soft market has actually been a little bit trickier for some agencies. Whereas before you were seeing increases in rates, and so their premium retention was higher. Now we're actually seeing premiums lowering, and so you can't rely on that increase in rate. And so it's been a little bit trickier, I think, for a lot of agencies. The other thing we haven't really talked about is retention as well, but that's a huge factor as well. If you've got business flying out the back door but you're pushing it in the front door, it's essentially just walking right through your office. So retention can be a big issue for a lot of agencies, especially going from a hard to a soft market. I think we're seeing a lot of that as well.
Yeah, I think that there was a lot of agencies when we went from a soft to a hard market, super worried about rates are increasing, it might hurt my retention, et cetera. Now you have rates coming down as the market's softening, and it's really going to highlight those that didn't really retain their book, or their policy count went down. Now the revenue's also headed down, where a savvy buyer would know that that agency is not as valuable as one that actually held on to those policies, even though rates are coming down. It is, I think when we operate in a soft market for so long, any change from one market to another feels hard, but coming from a hard to soft is actually more painful than going from a soft to a hard, because it really does impact your ability to have the resources you need to respond to what's changing. At least when you're going from soft to hard, the revenue is going up because rates are going up. In this particular one, having a budget and having a forecast of what you think is going to happen to your revenue is invaluable for an agency that might have some pressure moving from one market to another. If you don't have a budget and you've never budgeted before, now would be the time to think about putting that projection on paper and really giving yourself some, breathing room, or, the ability to sleep at night knowing that, hey, man, I have a plan here. I'm going to work the plan. We still don't know exactly what it's going to look like, but at least you've put something down on paper. And for those of you that don't, we have free tools of all the things we're talking about, especially putting a budget together. And if you are interested, please reach out to us. Adam, any parting advice that you would give to agency owners after doing so many valuations that you would just want to highlight or remind them?
Yeah, I would say definitely pay attention to your compensation. Know what percentage of your revenues are going towards your people. Obviously, they're one of your biggest assets. And then just like you said, have a plan. Pay attention. Though definitely. And if one of the other things I was going to say too, one of the things that we oftentimes see is that you've got this agency owner that's this huge visionary, but they don't like the numbers. At least have someone paying attention to your numbers. Obviously, we would love to have you as a client at AgencyFocus, but if you have a CPA, bookkeeper, whoever that you meet with on a monthly basis, just keep a pulse, or keep an eye on the pulse of the agency. That would be my biggest parting.
Awesome. Well, thank you so much for joining us and giving us your perspective. I appreciate you being on here, and I love having you on the team. That's for sure.
Thank you. It's great to be a part of the team.
Thanks so much for tuning in to the Insurance Refocused podcast. If you enjoyed the episode, please be sure to hit subscribe and leave us a review so you'll never miss us. Want to learn more about how AgencyFocus can help you grow your agency? Head to agency-focus.com or email Carey directly at carey@agency-focus.com. If you need to get in touch with me, feel free to shoot me an email at lindsay@agency-focus.com. Thanks so much for tuning in. We'll see you next week.